Good morning, Academy55. David Khan here on Thursday, the 20th of February. It's now 5 to 8 in the morning. We're looking at the EUR USD on the 1 minute time frame with our indicators and looking at the 5 minute time frame, which we are on now, to see where the sell zones and the buy zones are. But what we can see right now is sideways movement big time. I mean, there can't be a more graphic illustration of the sideways movement. We'll come back to that in a minute, but nevertheless, what we'll do first is we will look at the higher time frames and see if we can get some inkling of the bigger picture, what price may do within the London session, because that's where we are at the moment. So let's go on the daily time frame. And we can see these are all support and resistance lines that were drawn up previously. So what we can see here on the daily, if I just concentrating on we had an area of imbalance here that was taken out on this day here. And now we are climbing again. The last couple of days, since Tuesday, we've been on a march down, possibly to take out this imbalance and a bit further down, obviously. So on the daily now, we are actually climbing. So we'll go down to the 4 hourly. Do you remember that that line that we drew for ourselves, the trend line? Sweeping through the, so we follow that down. We've got 1, 2, 3, 4 touches on that line now. So that's a good line. But now we're on the other side of that line to the upside. We've got a little bit of imbalance. So I get the right tool to help. On this candle here, that's the wrong shade. It's a sell imbalance. So sell FVG, which stands for fair value gap. So that there on that candle there, that little bit there is imbalance. Price will definitely want to go into there at some stage. Are they going to be trying to do that now? Because there is no imbalances down here in the near future. So will price want to be tapping into that? To do that, obviously they got to get over this support and resistance line. Let's put it down onto the line chart. See, this area here is an important area. Because one touch there, one touch there. So that's an obviously important area where they could bounce or break. So we'll be looking at that during our time together. If price gets there, we're going to go down to the 1 hourly now. And there's that trend line we drew on the bigger picture. And indeed, we are coming up to that area there. And there's the imbalance that we drew on the big higher time frame. Below that, we got, I guess, well, we won't do that because we got this support and resistance line here. This to clear first. So that's in the way of our price anyway. So we're not interested in that. So we can come down and go on to the 5 minute time frame. And as we can see, we've had previous areas of consolidation. I'm going to mark that up. So all the way down to there, up to there. Again, I've got the wrong box on, so I'll just go into settings. Got a consolidation box. So we drag that across. All this area here is consolidation. We know that. We have don't forget the bigger picture is to break out to the upside, but then we got a line there, support and resistance line to have a look at. But we'll mark up the zones nevertheless. Zone up here, sell zone. There is a sorry, that's not right. Bring that down to there. That's the buy zone. Doesn't look like price is ever going to get anywhere near that. And now we're coming up to the consolidation area. So we'll go down to the minute, put our indicators on. And now we sell zone here. Look, we've got support and resistance lines, other barriers. We've got this sideways movement. So it's not looking too good for trading, if you recognize that. And we only want 1 or 2 trades a day. So would you want to be trading in these conditions? I would suggest not. Give yourself the best probabilities. So, for example, if we took this buy here, yeah. So takes your target up to 2 to 1. That's not too bad actually. that one there. That was at 10 to 8 this morning. But so I'd be looking at this area here as support and resistance. I'd be possibly putting my stop loss to my entry if we get to that area there. But it's breaking out of the consolidatory area now. And because if you notice on the bigger picture, we were climbing. The dollar is getting weaker. And that may continue the rest of the London session. So really, we want to be taking buys, but we missed this opportunity here. And now we're into a sell zone. So and we know this. So if you want to be giving yourself the best probabilities and the best options, is because of all this sideways movement, which is 80% of the time anyway. So we shouldn't be too surprised that that's actually happening. All these Elliott waves here. But generally, they are going higher and higher as the dollar is getting weaker and weaker because of world events. So The next one up on the rank for us is a sell. And for that to happen, we've got to get into the sell zone. But we also got a sneaky suspicion the price wants to at least tap into this imbalance that we drew up on the higher time frame. So any sell, I wouldn't be very happy about taking a sell because of what we've seen previously on the higher time frame, and also we've got all these areas here that we know price will get to at some stage. Why not now or within the next few hours? We're breaking out of that consolidation, which is a good thing. But depending on where we are, I wouldn't really want to take a sell. I'd rather take a buy, but the next one up for us is a sell. I might, depending on where we are when the sell happens, I'll be prepared to let that go and concentrate on buys personally. With regard to the fact that we own, like I said, we only need 1 or 2 trades a day, successful trades. The fact you've got to go downtown away from your computer, the fact that you've got to go to work away from your computer is immaterial. You can't force a trade. You only trade what you see and what you think you know, and give yourself the best probabilities of trading. So while we're waiting, we will play this.
Hi, this is Steve, and in this short video I'm going to just show you the settings for the Trade Assistant to make sure that you've got the minimum 2-pip stop loss on the Euro USD or any currency pair, and how you set it for if you're trading a commodity like the US 100, because the settings are slightly different. So here you can see we're on the Euro USD chart here. I've got my risk to reward on the Trade Assistant locked at 2 to 1. I've got my risk balance at 1%. Lot calculator is on, and my little purple button here between the buy and sell is also activated. So we're ready to bring the Trade Assistant onto the chart. Now you'll notice here that we've got the stop loss set at 20. That indicates 2 pips when you're on a currency pair. And we can actually change that here by typing over it. So if I type in there 40 and just tab off here, you can see now we've got a stop loss of 4 pips because we're on a currency pair. In this example it's Euro USD, but it could be Euro GBP or any currency pair. So let's just put that back to 20 for our 2 pips. We'll click off here, and now we'll just put the lines on so that you can see that is showing us 2 pips over here on the actual tool, ready to actually get involved with a trade if that's what we were going to do. But that's not what we're here for now. I'm going to click off the lines here, and what we're going to do is we're going to change our chart from Euro USD to US 100, and I can do that by dragging it onto the screen here. You'll see it now switch over to US 100, and now you can see that stop loss says 20, and that's wrong for a commodity. So what we want to do here is come in here and type 2000. This is the equivalent of 2 pips on a commodity such as US 100. So now when I put the lines on, you'll see we've got the number 2000 here, and if I just zoom around, you'll notice the 2 to 1 still applies, 2000 and 4000 here, where we've got a $1,000 trade in place, risking $1,000 to win $2,000. So that's the number that you need to get your 2 pip minimum on. So the minimum number would be 2,000. You could have anything above that if you're on a commodity like US 100, and the number will be 20, which is 2 pips equivalent if you're on a currency pair such as Euro USD. Hopefully you found this useful, and thanks very much for watching.
Thank you, Steve. Right, so we haven't missed anything. Obviously, I was watching just in case, but like I said, we're concentrating on the next alert, which is would be a sell, and this is what it would sort of look like. And that, and I'm not, like I said, the bigger picture is they'll be maybe looking to at least tap into this imbalance that we drew up on the higher time frame on the 4 hourly. And so therefore, any sells I think would be short-lived. I could be wrong unless they change their mind, of course, and maybe they might be coming down to this trend line down here back into the buy zone where all these buy orders, there's loads of buy orders. But depending on news and current events, which aren't any red flags at the moment, the natural progression is to find balance in the market. And to find balance in the market, they must enter into this imbalance area to balance that up. But if there's any urgent news that we're not aware of that strengthens or weakens the dollar, they will act on that. So in other words, if, I don't know, Putin decides to pull out of Ukraine altogether, obviously that would be good news for the dollar, and the euro would be going right down. And obviously they don't announce things like that. It just happens. The media are cotton onto it, and the markets are cotton onto it soon. And as soon as they cotton onto it, then down the euro will go again, and the dollar will go high because obviously the negotiations, what they're doing with the Americans and the Russians, may be seen to be working, if that's indeed what happens. That's just a wild scenario that I just come up with, but just an illustration how the market can move without you actually knowing much about world events. I always remark on the time when a few years ago, I was trading the GBP and Canadian dollar, and I was about 40 pips ahead on the GBP, which was going really, really well. And then I went down to make a cup of tea. I thought I'd come back and see where we are and possibly cash out. And when I came out, my stop loss had been hit. And the reason, and I didn't really know why until about half an hour later. And the reason was that Canadian is mostly driven by oil prices. And unbeknown to me at the time, a big oil tanker was going past Suez Canal, I think it was, or somewhere there, and it got torpedoed. And because of that, the Canadian dollar went the other way and took me out of the trade. Nobody, nobody knew that was going to happen, obviously. But that's just an example of how world events can catch up with the market. And that's a really quite, in a way, that's quite a good thing about trading on the minute, because the idea is to get in and out as quick as possible, really, of a trade, get your 2% and get in and out. So we have that's a real positive for trading on the minute time frame. The longer you are in a trade, it sounds a bit extreme, but the longer you are in a trade, the more susceptible you are to world events catching up with the dollar. Mostly, it's going to be mostly the dollar and the dollar reacting off that. So if we're in a trade and if it's going on for an hour and a half and going sideways, sometimes it's just best to take it out rather than wait to go to the 2%. Or if you are you've gone out, let the trade do its thing, because at the end of the day, it is only a 1% loss if indeed that will happen, and it could go in your favor. But that's just like the toss of a coin. But if you've got good analysis and good reasons why you think the price is going to go down to 2%, then stick with it. Got to make that judgment call as you find it. But again, that's a good thing about the Academy 55 indicator on the 1 minute time frame. Because generally we're in and out of a trade within like anywhere between 20 minutes and an hour. And sometimes, as you've seen, even a lot quicker within 10 minutes or even less. I think the quickest trade I ever had was 4 minutes or even 3 minutes. But you know, that's just hitting the market at the right time when there is volume in the market. And you never can be quite sure when that's going to happen. Myself, I've got some good news on my personal trading in front of you guys, the live bit. And that is if I just quickly now for the month of February, I have achieved my 10% target. If we just go on there, this is the latest one. Click on Trading View. That's the sell I took yesterday on the US 100. Waiting until after 2:30 till the market's kicked in. This is pre 2:30 UK time. As you can see, the candles are quite small, but the volume increases after 2:30. The candles are getting bigger. So a bit more volume in the market. Activate off the sell, and away we go. And here's the one the day before. Sorry, the morning, which was a loser, unfortunately. Again, I didn't. We took a buy, which unfortunately didn't work. Again, it reacted off that support and resistance line and went south. Again, to click off that trend line that we drew up for ourselves during the week. And will it want to do that again? I would imagine the more immediate thing for them for it to equalize price at the moment would be to tap into this imbalance and react off that. But we are in a sell zone now. Let's have a look at the 5 minute time frame. See, all these candles are not imbalanced candles because they've all been covered by these wicks. But we have got a little bit of imbalance here, but that is not, that's right near the entry. We've got imbalance here, so that's near the entry as well. So after that point there, what we can see is there's no clear reason for me that I can see for price to want to come down any further at the moment, because we've got a big swatch of imbalance up there to equalize the market. The only way it would come back down is because of what's happening with the dollar. If the dollar is gaining strength again, that will weaken the euro, and that will force the euro down. But the market makers want to equalize as much as possible, and to do that, all they've got to do is get to there, and that's equalized the market at the minute, as far as imbalance is concerned, before the bigger picture of carrying on up. So looking at that, I'm quite happy to, if a sell does play out, to let it go, because I do feel that it's not going to go very far before wanting to go back up again. I could be wrong, but the thing is, even if I am wrong, and a sell does exist, it might come down to tap into this the purple line, which it does many times before. But if I'm wrong, and price does go down and reacting off the dollar, I haven't lost any money. I'm waiting for the best probability of a trade. Right, we have a sell opportunity there. I feel I don't want to be taking this. I'm quite happy to paper trade, because again, I only need 1 or 2 trades a day. I know there's an imbalance up here. I know there's an imbalance just about here, but I know that I also know on the higher time frames there is no other imbalance, no other reason for price to get down here. If it does get down here, it's on the strength of the dollar. But to equalize things, they'll want to be going up to these areas here to get that imbalance, which they will do. Just when. We haven't got any red flag news. So they're talking about the yen. There isn't really any news for us to disseminate. That's a good word, that is. Disseminate. I must look it up and find out what it means. Sorry. Right. So I'm just setting this up for paper trading really purposes, because I don't feel I want to take a sell because of the reasons I've explained. But the good thing is we've broken out of this consolidation now. And what I would like to see is a sell take place, and then we can go carry on with a buy when a buy alert proves itself to us. So in the meantime, we'll play this.
Hi, this is Steve with a very short video to show you where to get the training for the indicators and tools we use inside Academy 55. So once you're logged into the members area, you'll see in the premium dashboard this section that's entitled Start Learning, and if you click here, that'll take you through to the learning library. Now, we'll say at this point, we highly recommend you watch each of these videos 2 or 3 times to get a full understanding of how everything works. Here you'll find tutorials on using the MT4 Trade Assistant and how to use the MT4 platform with the Trade Assistant. This is the longest video you'll find inside the platform. It's around 30 minutes long, well worth your time. Watch the video once, then maybe write a few questions down that you might have for yourself, and watch the video for a second time, and things will really start to make sense. By the time you watch it 3 times, you'll fully understand how everything works. So that's the longest video. It's about 30 minutes long, well worth your time. And then you can jump into individual trainings here for how to remove indicators. These videos are just a couple of minutes long. How to move MetaTrader around like you can in TradingView, Trading Assistant controls, how to do back testing in TradingView, how to draw vertical lines to mark out your hour, and so much more. And by the time you watch this video or see this video, there might be other trainings in this section. But everything here is well worth your time, and you find that, as I said a moment ago, from the main dashboard in the Start Learning section. Now, one more thing just to mention here. If you're looking for anything in particular, if you come down to the support name of FAQs, click on Get Support, and in this area you'll find a detailed FAQ section, and you can come through here. For example, if you're looking for an answer to a question about MetaTrader, have a look through these, and once you click through you'll find direct links to videos that give you answers to most of the questions that we get asked on a regular basis. So hopefully you found this useful, and back to your further training.
Yeah, thanks, Steve. Now, once again, we haven't really missed anything. We're getting a little bit of sell volume now, as indicated by our volume as part of our indicator. On very smaller, on the 1 minute, we've got a little bit of imbalance just there that they may feel they may want to take up. But on higher time frames, like I say, it's just about here. I mean, that might be enough for them to pop down. But the general trend is surges for buying power. I've as I showed you earlier on, I've got my 10% target for the month. That's already locked in. So any trades I take are purely with you guys, and I'll carry on the way I would normally trade anyway. And I put the results down below, not to be confused with the 10% I've already got. That's already locked in. So whatever happens for the rest of the month for me will not be converted into a monetary thing for myself. That's already been done. But it will be added to the monthly target. And I treat demo trades just the same, keeping discipline, keeping patience, keeping FOMO at bay, all those things exactly the same. Don't go crazy, just carry on. Why? Because why would I change? if I'm doing like 10% on a very regular basis and I'm happy with that, why would I change? It's not broke, don't fix it, sort of thing. So I carry on doing exactly the same. And indeed, like I've played once or twice, right, trading will get boring. But That's the whole point. If it's boring, it's good. But your mindset, like has been discussed, your mindset isn't like that. Your mindset, you want to try and make things exciting for yourself, but the the two things, trading and your internal excitement, the price doesn't really care about your internal excitement. The price is going to do what it has to do. It's like going to a disco with an accountant. Not that I've ever done that, but I'm sorry, there's any accountants out there, but accountancy has got the reputation of being one of the most boring jobs you can do, but it's very, very crucial and important. But you wouldn't want to go to a disco. This is not a disco. This is you in the middle of your accountant talking to your accountant. It's supposed to be boring. Apologies to any accountants. I don't mean you personally. I'm sure you're very well balanced, happy people. But I should imagine even you agree that your job could be a bit challenging at times, shall we say, as far as the excitement stakes go. But a job's a job at the end of the day, and it's a vital job that you're doing. So carry on. So we know we're in a sell zone. Indeed, we have tapped into this imbalance, and sometimes they tap and then move away and then come back later on. We know we've got imbalance here. But if I was to take a trade now, I'd certainly want to get past that line and that line there. I'd want it to pass that important area there and get down here somewhere, which is like 3.6. That's not too bad. And I'd be giving it a bit more of an oomph, which would take my 2-to-1 way down there now, which is not so good because there's a lot of it's a long way to go. Or do I still go for the real quick? I think that is possibly a better scenario in respect of what I'm thinking is the bigger charges for a buy. So if he was to take a sell, so I moved that, didn't I? Hang on, I can undo that. There we go, and I'll lock that in. So I don't move it again accidentally. So price would already go past there, break that, which would be good to so we can enter the trade in the first place. But then I'd be worried about that support and resistance line. But we are above the purple line at the minute. So and we are in a sell zone. So that's what we want to see. And as long as the take profit is above the purple line, this area down here, look where we saw that consolidation. That's a fairly important area. Our take profit is before that. but we're governed by the alerts and the sell alert. We haven't got a sell alert yet. We have now. The wave has just changed. I'm going to continue on this sell. I'm in anticipation of that green trend line turning red, and I've fallen foul of that. Let's have a look on trading view. There, the sell alert's gone again now. This is indeed where I am. There's a lot of anticipation from me, really, going into this trade. The, to be really happy with this trade, I want that trend to go red, and it could go red at any time now. Like I said, I'll be very worried about this line here. But we know we have a 65% to 75% success rate, near a 75%, because price going into the sell zone. I'll go back to trading view. Looking at the higher time frame, the 5-minute time frame. Look, it's checked out that imbalance. It's covered that imbalance now. So there's no other reason, not imbalance wise anyway, for price to come down there, because these are all covered by wicks and whatever. The only reason is price reacting off the strength or the weakness of the dollar, and also the strength of all the sell orders we know out there. I think at this stage it's prudent for me to put my stop loss to my entry to protect your equity, which I've done. Because, like I said, I think the bigger picture is and the trend line has gone red now. The bigger picture is to carry on with the buy. Is price going to come down to hit the purple line? I certainly hope so, because I'll take profits in the way. And that'll be a good place to, but price won't listen to me. It'll do what it wants to do. We've created more imbalances up here and here and here. And how important are they to go down and to strengthen the dollar a little bit? Hopefully I'll take profit. I'm on a risk-free trade now, just in case things do turn around quickly. We've got a little bit of imbalance down here, like I pointed out on the minute. Will they want to equalize that a little bit? I certainly hope so. But when are they going to do that? Are they going to do that now during this run, or are they going to do it later? Which they're obviously perfectly entitled to do. And also all depends on how many. We know there's a buy zone down here, and how many orders are there down here for them to go and sort of collect. We don't know that information. So I certainly hope that we have an extra little push to take us down so we can get our 2%. Just a little bit more. Indeed, I'm going to, no, I'm not. I'm going to let it go. let it do its thing, trust the indicators, because I'm already on a risk-free trade anyway, so that's the most pleasing thing. I mean, I'm keeping hold of my balance. I have been in a situation before where price has turned around and took me out, but I'm not going to lose any money over it. And as you can see, this is why I usually go down and make a cup of tea, because your mind is doing all sorts of things, and you can't do anything to influence it whatsoever. If you're watching it, you go, "Come on, come on!" people people get I've seen people get really irate on similar lives. It was just not the thing to do. You just got to be cool, calm, and collected about it, and just put things in place. And as you can see, we got our 2%. So what I do with that is, again, going back to my journal, my personal journal, I encourage each and every one of you to have your journal. Take this one, delete all the information there, make it your own. But what I do is now, as you can see, I've got my 2%. Oh, sorry, that's on the minute. There we go. And indeed, it's reacted off that purple line. That's why it's there. So what we do is we copy the link, get my journal back. This is the journal. And as you can see, my 10% is achieved. Now I've got a space underneath where I take the demo trades, because that's already locked in my 10%. So I paste it in there. The pair is the EUR/USD. The time was between 8 and 9. The date is the 20th. 1, 2, 5. That should automatically populate. There we go. The type was a sell. The result, it won, and 2%. So underneath here now, there's another box. And now you can see its total percentage profit of all trades is now 12%. I've already achieved my 10%. That's already locked in for me. And this tells you at the moment I've got a win rate of 64%. My personal journal. That was a demo trade. So the profit on the demo trade was 2%, obviously, because I just won that. So I encourage everybody to go in, all the members of Academy55, to have a look at that, make a copy of this, and make one of your own. But so going back to this trade, what I'll do now is I will open up the chat, because there's no trading tomorrow. I'll open up the chat. So if anybody wants to talk about what we've been doing here today, please feel free. But again, there is no trading tomorrow. And the main reason for that is if I go to my FX book, I like trading this time of the day, as you know, and it's a Friday. I'm quite happy with my trading for the week. I'm usually okay about that, and I give myself a day off on a Friday. But not just that, it's also because I knew tomorrow we got high impact news on the French and the German, and it might not come to anything. But because we're on the minute, one or 2 pips, even if it alters the charts, even 2 or 3 pips, that could mean the difference between winning a trade and losing a trade. And why take that chance? Because look, there we go. We've got high impact news there, high impact news there at 9 o'clock. We've got high impact news at 8:30, and at yeah, 2 high impact news, and also one for the French. There's a lot of high impact news between usually the time I like to trade with you guys. So why would I want to risk it? I won't. So that's why we're not trading tomorrow. I'm not trading tomorrow anyway. Um, because for that very reason. And so it just remains me to say we haven't got anything in chat, which is fine. So it remains me for me to say, have yourselves a great day. And if we don't speak before, have yourselves a really great weekend, and we'll come back strong again next week. Do appreciate you guys being on here today. So thanks very much, and cheers for now. Bye.